As pandemic restrictions continue to ease, shoppers are starting a new relationship with the streets, centres and parks, which were previously a feature of their weekly routine. And retailers and landlords are finding a new way of being.
If there's any silver lining to the successive disruptions that retailing has suffered in the past year, it's that it's enabled, and of course in many instances forced, a re-evaluation of how occupier businesses operate and their relationships with owners. Rents have rebased, in lots of locations by as much as 50% from peak levels. And whilst this is of course a very painful change for owners, it's now creating a platform from which occupiers can make money again.
While a dramatic fall in asking rents is wooing new entrants into the market, there is still a huge amount to do in terms of restructuring existing leases.
But in many instances, the first task is dealing with the rent arrears, which are now estimated at over £3 billion for the retail sector. We are seeing different mechanisms for effectively translating some of the arrears into rent-free periods. This can be related to an extension of the lease, bringing forward a lease renewal, or selling a break clause. It's a solution which works for both sides. And of course, one of the lasting legacies of the pandemic will be COVID or lockdown clauses in leases. Many retailers now won't sign a new lease unless it has a provision for 50 to 100% rent reductions for future lockdowns, and the dreadful prospect of what we've all been going through happening again.
As the vaccination programme has gained momentum, there's been an inevitable bounce back in retail sales, which has been accompanied by more positive activity across the UK retail property market.
Amidst the carnage, there is a core of retailers who are committed to maintaining and growing their UK retail presence, with a focus on restructuring their existing store networks and also taking advantage of rebased rents to augment their coverage. It's an interesting mix of names with whom people will be familiar, but also some new names who are taking the opportunity to establish themselves. However, it's important not to get carried away. 20 to 25% of UK shoppers have simply not yet reappeared in our town centre locations. We just don't know how long it's going to take for shopper visits to get anywhere close to normality. The full rates burden is back soon. Staff shortages are causing problems, particularly for F&B occupiers, and we are only starting to see the true financial impact of a lost year for all retail property stakeholders. There's consensus that the UK retail property void levels are around 15%. But if you also take into account the stores that are on flexible agreements or post-CVA terms, etc., then the real void rate must be double. Around 1 in 3 shops in the UK are either vacant, non-income producing, or on very short-term arrangements. Pressure on rents will inevitably continue, but we are seeing signs that rents in some locations are now stabilising as occupiers take the decision to lock in to the new rental levels.
And as the effect of the pandemic becomes more prolonged, there are increasing calls for government intervention.
The extension of the commercial eviction moratorium until March of next year means that there will have been a 2-year pause on landlords' ability to collect rents from their tenants. By any measure, that's an extraordinary length of time for businesses to be rendered unable to function effectively. Of course, lockdown has been an equal challenge to tenants, and the pandemic has demonstrated in the loss of jobs and livelihoods just how very important the retail and leisure sector is to the economy and wider society. The moratorium extension has been generally welcomed by various representative bodies across the sector, but it will also give further wriggle room for those tenants who've taken advantage of the situation. This will make it even harder for many business owners who are facing their own continuing crisis to have a sensible dialogue with these tenants. It is a question of timing and process. Whilst free market economics must be allowed to be the driving force of changes in the industry, thoughtful legislation and regulation will allow breathing space so businesses can assess options, adjust business models and seek investment for stabilisation, and even opportunities for growth in a rebooted market.